Hi and welcome to the Market Alert for Tuesday, the 1st of August 2023. So, markets incredibly quiet yesterday and very choppy as well. But oil soars in July as massive short squeeze sends stocks up for a fifth month in a row. You may have noticed that fuel prices are once again increasing. At the petrol pumps, US stocks edged higher in choppy month of end trade as well. So US stocks were ultimately higher on what was a choppy day for the major indices month end, amid somewhat mixed data releases and as participants await to this week's upcoming risk events. Those risk events, of course, are the non-farm payroll, which we looked at yesterday. Just to remind you, we've got that there, and also the Bank of England as well. And there's a headline, which I'm going to find you, which I forgot to include here, but I'm sure I downloaded it. Yeah, let me just grab this. Yeah, the jokes write themselves. Absolutely brilliant. This is the Bank of England will be leaning on the expertise of Ben Subprime is contained. That was his comments during the 2008 subprime catastrophe. Bernanke to lead a review into the bank's forecasting performance. So the man who said there was no problem with the subprime mortgage market is now going to head up a review into the Bank of England's forecasting performance. You really can't make this stuff up, can you? I mean, it's just one circus run by clowns. It's just unbelievable. But yeah, so that's what we've got coming down the line. But let's move on, have a look at the markets. In fact, I'm going to kick off with the implied volatility. Today we've not looked at it for a while, and the reason being is because it's been pretty quiet, as you can see down here. It's we've got down to 10.01 and now at 10.45 we spiked up a bit, but nothing major. Stuck in a range, so is the market, and that's why we're seeing this. But the good news is when this breaks off these highs, well, we're going to get to the all-time high first, but then when we got to the all-time high, then you're going to see some really good corrections in this market, where the implied volatility got down into these lows. So hang in there. It's just a matter of time. We've got the summer holes as well to contend with at the moment. You can see this in the 6 monthly chart and right in the monthly chart as well. You can see we're right down here in this area, so we know we're due for a major correction. What that will be, I do not know. Whether it's a black swan event, who knows? But we are due. But they won't do it in the summer. It's rare. We had one occasion which eludes me at the moment, but we had a summer catastrophe, but I can't think when it was. It was probably way back in 2007. It was, in fact, yes, August 2007, and then from the January 2008 we had the rest of the subprime catastrophe. So yeah, we'll just have to wait and see what comes along. But certainly the implied volatility is indicating that something is en route for sure, because when it goes really quiet, it then gets awoken quite abruptly when something comes along. So, like I say, hang in there. It's the volatility will be returning, and it will return with a vengeance as well, which is not what we want either. We want just nice, moderate volatility. So, but then we get given what we're given, don't we? So we have to make do with it at the time. Okay, let's move on. Have a look at the markets. Kick off with the Dow. So in the Dow, yesterday we started to move back up. We took out yesterday's high, but not convincingly, and overnight the market showing a bit of weakness as well. We haven't removed yet the 35686, but it's early in the week yet, and we've got the ADP numbers tomorrow, Bank of England on Thursday, and the non-farm payrolls on Friday, so plenty of opportunity to send this market back up in the monthly chart, as can be seen there, up to that all-time high in the Dow of 36,952. So we're just starting off a new month today, so it'll be interesting to see what happens there. 30-minute chart for yesterday, we were okay in the electronic session, got very choppy in the afternoon and evening session, and then just before the close the market was ramped up over 100 points and currently remains above the close and is sitting above the BRN there of 35,550. High needs to be taken out. We've had a look at it overnight, but we need to take this out. But don't be surprised, as most mornings we see the market sell off first and then move back to the upside. German DAX managing to take out the last 2 days highs, well 3 if you want to count this one, so 1, 2, 3, and the market sitting at 16,531 for yesterday, new all-time high for the German DAX at the moment, sitting above the 5 MA as well. We are due for a correction even if it's just 1 day, but again yesterday, choppy session to the upside there. We took out the high, and then the high became an issue in the afternoon and the market just drifted lower. It was a very, very strange session yesterday. Let's just have a quick look at the 5 minutes in a bit more detail. So as you can see, we have the classic shakeout in the morning, first thing, then we get the retracement, then we head up to the previous day's high. On this occasion we managed to get through it, and then once we've achieved this goal up to the R1, which you can see there, we're then back down to the high. And that's how it was yesterday, and then they brought it back above the high, as you can see there, in between the high and the R1, and then the market down. The afternoon was just dire. It really was. It was pain to the point of it being painful. Just look how tiny these bars are inside of this afternoon session here, and that's just after 2:30. When the Dow had opened yesterday. I mean, let's just have a look at those 4 bars there for 20 minutes. Low to high, 13 points. Just absolutely awful. Like I say, the positive is we know there's some big moves coming as the implied volatility continues to trade in the lows. The only bit of a movement was this one where the market spiked down and then managed to move back up, and then overnight, we can see that the market's filled the gap that it created there and is now sitting just at around the close. It's below the DP though, so again, don't be surprised if we have a shakeout and then bring it back like we've seen for the last few weeks. In the S&P 500, like the Dow, trying to still take out Thursday's low, I think that is, Friday, Monday, yep. So again, above the 5 MA, 30-minute chart, moving up nicely in the pre-market, very choppy, and again up before the close, taken out the high already for yesterday, so mission accomplished there, and we'll see what the market does if we can hold the close, but again expect a shakeout and then an attempt to move back to the upside. In the FTSE 100, also sideways to higher, taking out the highs each day as well, 7723 at the moment for this one. 30-minute chart for this. We moved up to begin with. We had a bit of a up and downer there, and then up and then down, and then just again sideways in the afternoon. Like I say, one of the worst afternoons I've seen yesterday. And if you look in the smaller time frames of the 2-minute charts, it was just unbelievable. It was just so sideways. Anyway, yeah, so the FTSE 100 finding support there at the DP at the moment. Economic news for today, just before we have a look at the US dollar. We've got ISM at 3 p.m. It's all in the afternoon, so the morning session will make its own direction. Barring any geopolitical news, the market is likely to shake out, then move back to the upside. In the US dollar, this moving up yesterday, just slightly, but it's been moving up for the last week or two, so showing some strength there. So let's have a look at the effect on the metals yesterday, and you will be surprised, as I was. So yesterday, silver being allowed to move to the upside along with the US dollar. Let's have a look at the 30-minute chart. Market exploding there. But according to one of the sources I look at, there's a 50 million ounce whale in the market at the moment. That means super trader in the silver market. So whether that news broke yesterday to drive prices to the upside, I don't know. But overnight, it seems to be having been forgotten, and we're back down to the DP. I suspect that the low will be tested, and we'll still be heading down to the 200 MA when we get the news on Friday. In the gold market, similar picture, allowed to move to the upside yesterday, and in the 30-minute chart you can see that reaction, but overnight's given back 62% of that already. So again, it's just pumping the markets, take the shorts out, then go back on the short side knowing that the shorts are going to get back in, and you've cleared them out and taken the losses off them, as it were, i.e. profits for yourself. So yeah, we'll just have to wait and see on that one. But again, it's going to be directed by the news this week. And in the gold-silver ratio, we can see the impact there yesterday. Silver dropping back down below the 80 level, which is good, but returning to the upside towards the 80 on the overnight. Okay, that will do it for this one. Like I say, let's see things cheer up a bit today, because yesterday was just dire in the afternoon. So we'll just have to wait and see, though. Like I say, we can't control it. We just have to work with what we've got, and that's one of the things of trading the markets, of course. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.